we're also watching Research In Motion, the maker of the BlackBerry. It fell to its lowest level since 2009. RIM is battling a declining share of smartphone sales, while demand for Android phones and also the Apple's iPhone continues to grow. Today, Goldman Sachs says to buy RIM before the June earnings report, to buy it at $40 per share, which is pretty much where it's trading at right now. However, Jefferies analyst Peter Misek said RIM may soon suffer from the same problems affecting Nokia, and his price target for RIM is $35 a share. Peter joins us now on the phone. And Peter, what's got you convinced that RIM is going to go the way of Nokia?
Really a few factors here. The first is selling prices have been coming in as competition has been moving down market in the lower end of the smartphone market. We have Android devices selling now for $100 to $300. We have the iPhone 3GS selling for around $400, and we think a lower-cost iPhone is going to come out at $300 price point. So RIM's been forced to respond with lower prices, and their margins have been falling, and we think that the handset business could actually have break-even type gross margins, and if they have to cut prices more, actually tip into negative operating margins, which would be a pretty bad situation, similar to what's going on with Nokia.
Peter, how fast are things changing for Research In Motion? Correct me if I'm wrong, but I believe you had a buy rating on this stock heading into the year. You were bullish coming into this year, and you've obviously had to change your expectations.
Yeah, we were wrong on the company's ability to execute. We looked at QNX as a very good operating system that would allow them to draft the Android ecosystem, basically to take the Android app market and virtualize it on top of this OS. But unfortunately, they decided not to do that. They've taken a very roundabout way, forcing Android developers to resubmit their apps even while they virtualize it. So in that process, we think is going to get very little traction. And there's been huge product delays. BlackBerry OS 7, which is an interim type of OS, think of it as like a Symbian, is going to sunset, and it's been delayed. And QNX, we think, has been delayed to the second half of next year. So by the time QNX handsets come out middle to late next year, we'll have an LTE iPhone, we'll have LTE Android devices, and we'll have a lower-cost iPhone.
Peter, real quickly, Goldman came out saying buy it at 40 before the June earnings report. Is this a stock now that you trade, you don't hold anymore?
That's not the way we do research. We look at things on a one year to 2 year time frame. We do try and give folks previews into quarters, etc. We think that there's a lot more risk ahead. We think if we're right on the product delays, the August quarter will also be bad. So we wouldn't agree with that call.
All right, Peter, thank you very much. Peter Misek of Jefferies.